The National Statistical Organization has said that this year the economy will contract by 7.7%. Actually, it has put out the advance estimates for the current year, which is the first step to building the budget on February 1st. And as I said, it has said that it will be minus 7.7. That is what most people in the street estimate. If you remember, the Reserve Bank also estimated minus 7.5. But I just want to point out that a lot of people expect that it will not turn out to be as bad as this. The economy may contract by only 5.7% according to Morgan Stanley and 6.4% by ICICI Securities PD. A lot of people expect that this number will therefore be not minus 7.7, maybe minus 7 or even minus 6.5. But for the budget, the more important number is the nominal GDP. See, this minus 7.7 adjusts for prices. But if you take price increases as well, then in current terms or nominal GDP, the NSO says has contracted only by 4.2%. Now, this is important because the budget actually gives a forecast of the nominal GDP. Now, let us look at the aggregate number which the NSO puts out. The NSO says that the economy has contracted from 204 lakh crore approximately as of March 2020 to 195 lakh crore when we come to March 2021. So on this, that is the 4.2% contraction. Now, on this basis, the budget will have to estimate how much the economy will grow from March 2021 to March 2022. And whatever it assumes over and above this 194 lakh crore, grow by 20 lakh crore, 25 lakh crore, on that will depend what will be the tax assumptions, what will be the fiscal deficit, what will be the market borrowing. So that number becomes very important. Now let us see what can be the assumption. Last year, if you take the average of the last 4 or 5 years, the government has normally gone with a 12% growth of nominal GDP, 7% real GDP growth, 5% inflation, and therefore nominal GDP should grow by 12%. Now, let us see what happened in FY20, supposedly a normal year. In that year, there are some people who believe the government can assume more than 12%. But when they assumed, a 10-11% GDP growth in FY20, the actual tax revenue growth was only 3% in FY20. So this year, although in FY20 the nominal GDP grew by 14-15 lakh crore, from 189 lakh crore, the GDP grew to about 204 lakh crore. Tax didn't grow much, it grew by only 3%. So the big question that the market will want to know is, first of all, how much will the government assume the GDP growth? From 194, does it grow to 220 lakh crore, 224 lakh crore, 230 lakh crore? Because everybody is expecting a huge earnings growth from corporate India. And secondly, just because the GDP grows, does it mean tax will grow? How much can the tax grow? Can it grow by, 10% this time and not just by 3% like it grew in FY20? These are the key questions we have to answer when we start to visualize the budget and the big macro numbers. To help us understand that, we have with us two economists. We have Neelkanth Mishra of Credit Suisse and Sonal Varma of Nomura, India. Well, Sonal and Neelkanth, thank you very much for joining me. Let me start with you, Sonal. Your day job is, of course, estimating these numbers. If we go with this 194.8 lakh crore economy as of March 31st, what is a reasonable assumption that the budget can work with? Can we say we will be 215 lakh crore, 220 lakh crore, 225 lakh crore by the end of March 22?
Lata, I think the GDP numbers actually look like they're going to be even higher than what you're suggesting. So in terms of the nominal GDP itself, given the faster pace of economic normalization in India and continued improvement in real economy because of easier financial conditions, we have actually revised up our growth numbers. So for FY21, we're now looking for minus 6.7%. So we do think that the advance estimates will get revised higher. And particularly as we look out into FY22, our expectation is that real GDP itself could rise by over 13%. Other than and there are of course many reasons why we think real economy will pick up. We can go into that later. But I think in terms of the inflation assumptions also, this is going to be a year of higher commodity prices. And that should also boost the GDP deflator. So our own assumption, Lata, is nominal GDP growth next year could be closer to 17% odd. Our guess is that budget might be a bit more conservative. And as you know, the Reserve Bank's assumption is for FY22 real GDP growth at about 10%. So if we go with those numbers and assuming a certain inflation rate, my expectation would be that the budget might assume a nominal GDP level of closer to perhaps 22.5 lakh crore or so. So in terms of the boost, as you were saying, to tax collections should be much higher.
Okay. If I assume a 6.7% fall in the GDP and next year, 17% nominal GDP growth, then actually I get something like almost a 230 lakh crore in terms of a GDP number. That will be big. Neelkanth, you have always been arguing, even in your Indian Express articles, that or was it Business Standard, that everybody is overestimating the contraction. So do you think the budget should go with what Sonal is saying, almost a 230 lakh crore nominal GDP?
So I do think that there will be a difference between what you think should be done and what is likely to be done. So as market participants, I think it's as important to predict what is likely to happen than expressing views on what should happen. So I tend to agree with what Sonal said, that the numbers for both FY22 and 21 should be higher than where consensus is right now. And the better measure, in my view, is to look at FY22 over FY20. And also assume that FY20 itself was not fully normal, right? So there was intense destocking, the BS4 to BS6 transition. The last 15-20 days of FY20 itself was actually quite badly hurt. If you remember, Verses revised the actual numbers on tax collections were 1,60,000 crores lower. And this is why, the 3.8% deficit had become 4.6%. So the number that you took, that 3% growth, was, I think, already affected by these tax numbers. And so when we are thinking about what is likely in FY22, I do think that a 17-18% kind of a nominal GDP growth is what will eventually come about. But I'm also aware that the government may not go with that kind of a number.
Okay.
Because the government is likely to be a lot more conservative. And therefore, the number that we see is going to be more in the 12-13% range, would be my prediction. Not that I have any idea on what they're going with.
Oh, of course. It will be a political decision, perhaps. But 12-13 would be really, way off the mark, isn't it? The RBI itself has put out that in the first quarter they are expecting 20% or thereabouts in terms of a growth, and in the second half they are expecting probably 6.5 or 7. So, won't the government have the backing of the Reserve Bank to at least go for, something like a 15% nominal GDP growth?
No. Okay, so if you think about the budget making process, it is not very different from how it happens in various companies, right? So there are ministries who have plans and expenditure targets, and there are ministries whose job is to get the revenues. So eventually, it will not be what is the RBI saying, or it may be a part of the debate, but I think the government will go with what the tax department, the revenue department thinks is an achievable number, and there will always be, of course, a give and take. But so I don't think, RBI's input, consensus input, IMF input, World Bank input, I think rating agencies input. So I think they will look at those numbers, but I think they will go by what they feel comfortable with, particularly given the volatility in the last year.
So 12,
So you have to
13%.
remember that
Your bet is 12, 13%.
I would assume that would be the number that we see when the budget comes out. That's my assumption on what I think. So if I was doing my budget preview,
Okay.
I would use those numbers.
Okay, but Sonal, I don't know to what extent you have done your budget preview, but tax assumptions. I mean, way too often we have assumed fantastic tax assumptions, and they didn't happen in FY19, they didn't happen in FY20 at least. Okay, there was 1 month of COVID impact. What could be a reasonable assumption this year for tax? You know, I think the last year FY20 actuals were 13.5 lakh crore.
Yeah, Lata. So I think, our own assessment is the tax buoyancy should be much higher next year, because you can have a very high nominal GDP growth, but if it's largely driven by inflation, whereas the real activity is low, the tax buoyancy can also be quite low despite a higher nominal growth. Now, that is not going to be the case in our view next year, because you're getting sort of a dual push both from higher real activity and particularly activity in the industrial sector, which is really driving this normalization and now recovery in India. Because what that means is that the buoyancy in the indirect tax sector in particular should be much higher next year. So, our own expectation is even with the conservative assumption, the government is likely to go with 15% kind of an increase in nominal GDP growth. And given the typical tax buoyancy assumptions, typical tax buoyancy given the macro environment, particularly both, like I said, a real GDP and an inflation kicker, I think 20 to 25% kind of gross tax revenue growth is what should be a reasonable assumption for next year.
Neelkanth was visibly surprised by that number. Neelkanth, after all, this year has been a weak year, so a 20-25% assumption will be not par for the cause?
First thing is that this is let's not base the decision on what happened in the first 8 months. You must have seen in the last 2 months. Okay, so now before I say that, my surprise was that to actually expect the government to do that is something that I think is optimistic. It is quite possible. In fact, what Sonal just said, it is quite possible that we see those kind of tax numbers. But it's just that I don't expect the government to put that in the budget this year. So coming to the maths behind it, you may have seen that tax revenues, the gross tax revenues in the month of November itself are up 23% year on year, right? And we have seen e-way bill generation in December up 13% again, right? So that's a reasonable indicator for GST. We have seen corporate taxes. I think the advanced tax payments were quite healthy, and we also have to remember that there was a 25% deferral of TDS. So a lot of and the income tax, personal income tax filing dates have been pushed back. The excise duty on petrol, diesel is up quite strongly. So I think this year itself we could see a pretty decent growth. Meaning much better than what we would have thought 3 months back. And therefore, when we are setting the base for next year, we have to remember that when a budget is framed, there is a revenue department which has to commit to a target. And given all the uncertainties, given that while the vaccines are expected, the reality is that there's been a lockdown in the UK, in Japan, and there is supply chain disruption. Auto companies are not able to produce globally. So I think there are significant uncertainties still on the horizon. So I would be surprised if the government went with that high a number. Though I do think that number is achievable.
It's achievable.
I think that next year we will see a fiscal positive surprise because the government will be too conservative, and I think the economy will do much better.
Those are going to be my questions to you. What kind of a fiscal deficit are you all estimating the budget to do, and what will the reality be? Those questions to my guests in a minute after this break. Well, Welcome back to our budget brainstorm. We are discussing the big budget macro numbers and the assumptions that the budget may make while forecasting nominal GDP, tax growth, and therefore the kind of fiscal deficit and market borrowing that it might go with. We've been speaking with Sonal Varma, the Chief Economist of Nomura India, and Neelkanth Mishra, the Chief Equity Strategist India and Asia Pacific for Credit Suisse, also member of the PMEAC. Okay, Neelkanth ended by saying that he expects that the budget will be actually conservative and the reality will be the fiscal deficit will turn out to be lower than what the budget will forecast. But first, what is it likely to forecast, Sonal? Last year, before pre-COVID, estimation was about an 8 lakh crore fiscal deficit. Do you think this year the budget will make bold and assume a larger fiscal deficit because, it wants to stimulate the economy? That has not been the government's behavior this time. But what are your estimation? What are your assumptions for FY22 budget?
Sure, Lata. I think one thing I do want to point out is that if the government makes too conservative an assumption, ultimately the market borrowing numbers are based on that. That would actually send a signal that the borrowings are going to be very high. So I think the government also needs to, of course, not be over optimistic, but the numbers need to be realistic. Otherwise, we'll end up borrowing, a lot more than is sort of necessary and sending a very aggressive signal on the borrowing side to start off with. So that was one. In terms of the broader fiscal target for next year, I think, the question is, what are we going to end up FY21 with? What we have seen is actually a positive surprise on the fiscal side this year. Early on, when revenues were weaker, the government actually did go slow on spending. And now, as revenues are picking up, expenditure has picked up. But on aggregate, fiscal deficit looks like it'll end up being closer to, on our estimates, about 7% of GDP for the center this year. Now, looking ahead, I think there are 2-3 things that the government needs to sort of keep in mind. First, if the overall economy is normalizing, then even the path has to be towards sort of fiscal normalization. So our expectation, therefore, is that the fiscal deficit from about 7% will probably be pegged at around 5.5% of GDP. Second, the timing of the spending is also going to be critical because the economy, until the vaccine, will still need a lot more fiscal support. And therefore, the spending will need to be a lot more front-loaded even in FY22. And third, it needs to be a lot more targeted. Last year, of course, the focus has been more on sort of survival support kind of fiscal measures. As we look forward, the allocations need to be a lot more around, of course, health and vaccine-related costs. It needs to be a lot more on infrastructure kind of spending. So more consolidation, B, more front-loaded, and C, more targeted is sort of the broad approach we expect the government to take.
Okay. What are your expectations, Neelkanth? Do you think 5.5% was what Sonal is going with? Your fiscal deficit expectations, and broadly in terms of expense, do you think we should expect a larger capex expenditure number, or not so because you have a vaccine expense?
No. So, see, again, when we are doing this exercise, we need to be cognizant and in your own mind have one, what you would like to see happen, and second, what is likely to happen, right? So, and so those are two different things. I agree with Sonal that I think this year's number, and I've seen numbers of economists at 8% for FY21 and all that, which I think is unlikely to happen. I think it won't be that high. The way I arrive at some of these is to look at what has happened to borrowing and what is the nominal. So I was at, I would have expected 6.5 till yesterday, but the nominal GDP number that the CSO gave was 1%. So it's now 6.6%. Because if you assume what the government borrowing target is and assume that there is $500 billion extra that they will get from other sources of financing the deficit, then we are talking about it, 12.6 trillion rupees or some in that ballpark, the fiscal deficit, and which means a 6.6% ratio. But it could be 7, right? If there are other sources the government taps into, it is quite possible that we get there. Next year is the tricky one. Next year, I think, if we are talking about even a 12-13% nominal GDP growth and some kind of tax buoyancy, I wouldn't expect a lot of it, because remember that this year excise duty has already delivered quite a bit of growth, and it was active for a large part of the financial year. But if you assume a reasonable number, and next year most likely you'll have to do some assumptions on disinvestment and all of that, I think the deficit number would be dependent on how much the government can realistically spend. From the perspective of positioning, it is very clear that the market is assuming that the deficit will be higher. So the 3%, etc., that we used to talk about a year back is not likely anytime soon, and therefore, if you give a higher number, no one is going to get shocked.
5.5 is okay.
I'm not saying that, so I don't want to put a number which I have not published. So, okay. So the thing is that because you have to understand that when you are setting up the budget, will you shock the market? Exactly what Sonal was saying, that, will you come up with a borrowing target which is really surprising? My sense is that the government is likely to be more cognizant of how much can it spend. We tend to assume that the government can spend at will. Right? It is not that easy. In fact, you may have seen that in the September quarter, the GFC fell nearly 20% year on year.
Right.
Right, and this is partly because of the fiscal stresses at some points, but mostly because you and I can work from home, but in the government, mostly physical files have to move from one point to the other. And a lot of work got stalled, and which is why now you are seeing the expenditure growth really pick up. There are restrictions. There is an inertia. There is only you can spend on a few things, right? So you can press a button and deposit into people's bank.
Can I say your assumption is not for a big fiscal stimulus and not for a big capex?
See, the expenditure number can be higher. An expenditure number. The question to ask is how much higher. Right. So if you build in certain assumptions on, say, salary and pension and all of those, I think the expenditure can be higher. Now the question is how much higher, and if you actually assume 13-15% kind of tax revenue growth, you would wonder where the government is going to spend it. So I think the fiscal and the good thing is that the market is anchored towards 5.5 to 6%.
Okay.
So the government will have a fair and you have to remember that a lot of the expenditure this year will not repeat next year. Okay. Not a lot, a reasonable part of the expenditure this year will not. You're not going to be needing to give free grains and
that's true.
Excessive Narega and all of that. So, and then like the clearance of the fertilizer subsidy arrears, those are things it's one-off, right? So you won't have that next year.
Okay.
So I think as the government sets about setting the fiscal deficit target, it would need to do some sensitivity around what revenue growth should it assume, how much disinvestment it can do realistically, and also how much can it really spend, and then arrive at the fiscal deficit.
All right, fine. I guess we will have to do another session to get the exact fix on what the market is expecting by way of expenditure numbers, 20 lakh crore or 26 lakh crore. It could vary. I want two quick questions because I'm being warned I'm overshooting on time. Do you think the cost of money can rise? Quick answers from both of you, if possible, in 10 seconds. Because, RBI will have to normalize liquidity. And as you say, there is a commodity inflation. So, Sonal, do you think the 10-year would be like 6, 6.5? Where are you seeing it? Say in the second half.
Yeah, Lata, probably a gradual increase in the second half. But I think in general, RBI would be wary of too sharp an increase. So we are going to see more active RBI operation twists, etc., to also keep the long end a bit more anchored. So shouldn't be runaway, but yes, trending higher.
6.5 is okay, you think. Neelkanth?
Yes.
No, I think that, I mean, I would not expect, so there will be, I think, my sense is that as the food inflation starts to cool off, and my own expectation is that some of the commodity inflation will not last beyond 6-9 months, because what we are seeing now is a lot of the supply chain bullwhip, which is hitting globally, which is why there's a shortage of steel, there's a shortage of some semiconductors, there's a shortage of copper,
Yes.
a shortage of plastics. But the aggregate demand, if you think ex-China, actually 2020-21 itself is not going to be higher than 2019. So I don't think this is a sustainable growth that we are seeing in commodities, and there should be, I think, a possibility of continued sort of low bond yields as we go into the second half of the next year.
All right. So you both agree that it cannot be too much, but maybe some rise in bond yields is possible. Sonal, Neelkanth, thank you very much for kickstarting our budget brainstorm discussions on the big numbers. Preliminary numbers from our economists is that the government can assume 17-18% nominal GDP growth, but it is likely to assume something more conservative so as not to upset the markets, and therefore probably you will not see too much of fiscal pressure because it will end up borrowing less than it can. Well, that's the preliminary expectation. Let's wait and see how things pan out from here on. We wrap up this budget brainstorm. Stay on with us. There's lots lined up for you.